Thank you, Lyndon, and thank you for still staying with us as we continue looking at the Zambia Banking and Non-Bank Industry Survey for 2020. To anchor the panel discussion, I am Gravazio Zulu. Remember, if you are watching us and following us virtually, you can post your questions on the platforms and we'll find time to pose them to the panelists. Let me introduce the panel for this morning. I have Financial Sector Deepening Zambia, FSD Chief Executive Officer, Betty Wilkinson. It's a pleasure to have you on the panel.
Pleasure.
I also have Bankers Association of Zambia Deputy Vice Chair, Mangolwa Shakalima. I know you've already been introduced. Welcome to the panel.
Well, thank you so much.
And I have Andrew Chibuye, PwC Country Senior Partner. Andrew, wonderful presentation you made.
Thank you, thank you.
Welcome to the panel discussion.
Thank you.
I'll start with you, Betty. You have not given us your impression on the report that has just been presented. I want to get that view from you now.
Okay. Firstly, the report's excellent. It really pays attention to what the main issues are, what's on people's minds, what keeps them up at night. And I think it also reflects the financial market generically. I want to say something about the three areas that are the most key ones in terms of the future. So the first one is in the economy. The debt has to be rearranged. It's actually a constitutional condition of the IMF that they cannot lend to Zambia until this issue is resolved. So there's going to be a lot of scrambling around after the election while this gets handled. Then an IMF program is necessary, not only because it helps show the market that there's trust in the international financial institutions, but also because unless the IMF actually goes into a program or approves agreements, the World Bank can't lend to Zambia, the African Development Bank can't lend to Zambia. Many of the other bilateral donors are going to be looking for this kind of approval. So that's really important as a first step. Then finally, in terms of the economy, there has to be some resolution of the large amount of debt that's sitting around and due to domestic companies. That's a big one because the companies don't have any money, because you heard that in the non-banks. They're not receiving their funding that's due to them. They can't then turn around and move ahead. It's a big problem. So that's going to be a big next step. On the COVID's affected the entire planet, and it's affected Zambia too. And a lot of the effects in Zambia have been hidden. So for example, you have drivers who are only working 2 days a week, but you're paying them for 5. You have offices that have to be fumigated. You have people who need to be in the office but can't be in the office, so how do we handle their work contributions? There's a slowdown in the economy. There's all sorts of other things that are going on in terms of our restructuring and thinking, how many offices do we need? How many people in the office and when do we need them? So all of these kinds of things are happening in Zambia as well as they're happening around the world. I think, let me take the opportunity. Everybody who's watching and everybody you know, get vaccinated. As soon as you can, as fast as you can, because what happens in the world is we see in the United States, where I'm from, if you don't get vaccinated, you get sick, you go to hospital, your friends die, your family dies. We've seen that everywhere in the world and in Zambia. So getting vaccinated, getting the population vaccinated, and starting to think about what our new normal is going to be, this is pretty critical from pretty much today on out. And then finally, on the question of credit risk is all tied to the new normal in business. How are we going to do business? What are we going to need? You'll see in the write-ups that I've said the most key things here are working capital and reinvestment for small businesses. Those are the things that are going to rebuild this economy, and we're going to need it pretty soon. Thank you.
Smangolo raised a key point, interesting one, competing while collaborating. There was an issue of how mobile money is competing while collaborating with commercial banks. Are you shocked or impressed with how commercial banks have managed to weather the storm, managed to hold its own?
They've struggled, haven't they? And what I'm expecting out of out of the commercial banks, and you'll see this in my article as well, what we're expecting to see developed is a lot more work on digital and on digital partnerships, a lot more work on understanding the client base, because there's a huge amount of money sitting around in savings groups and and in mobile money accounts. Now what's happening is, instead of saving in a bank, you save in your mobile money wallet. Is that the way we want this to go ahead? We can't if we want to do lending with these funding. with these funds. So I think, competition is important. I think we're seeing it around the world. I think we'll also see it in Zambia. And it's a very important development and a positive one in my view.
Simangola, you're coming from the Bankers Association of Zambia, and Betty raised another issue. She spoke about elections, and I want to get from you, what are your optimism levels post-elections?
Well, thank you, Grivasio. I think the we have a history behind us that shows us that I think we, as a country, post-elections, we quickly settle, get into action and start focusing on issues that pertain to economic activity. So I think the optimism is quite high in the sense that I think we'll see renewed focus around how do we support and sustain small businesses, how do we support individuals, how do we make sure that the productive sector is pumping. And in this case, talking manufacturing, agric, and these sectors that are so key, to this economy. I always say that we are very lucky in the sense that on the production side, I think there's quite a bit of activity happening. So if you ask me from where I'm sitting, what I see going forward is renewed focus around, bridging the gap between production and consumption, which involves, processing, value chain management. Because what we're learning from COVID is, given that we produce a lot of things, we could do well, to process, to add value to those products, then that will sustain our economy. When others were shutting down, trading got affected, and it's been our mainstay. So I think post-elections, my optimism is we'll see a lot more investment in that space. I think in the previous periods, we've seen a lot of infrastructure development, to support economic growth. But I think this leg will become more pronounced post-elections to say we've got the infrastructure in place. Now, how do we support economic activity? By adding value to what we're producing, by processing these things so that we can support the economy. And I think we'll play a key role as a sector ourselves. Banks, non-banks, we are there to facilitate most of this economic activity, by supporting these needy areas.
With the possibility of Zambia getting on the IMF program, what post-elections, what would be your macroeconomic expectations?
So I think with that coming on board, definitely we'll see probably further stability around the exchange rate, because to Betty's point, it's a show of confidence in the economic programs of the country. Because remember, the program comes with tangible actions around what you're going to do, especially on the fiscal side. Betty mentioned debt sustainability and things like that. I think we are likely to get onto that program because the actions have sort of been put in place. The roadmap has been established. And I think the point of emphasis is execution of the plan. If we are to be true to that plan and execute it diligently, then as IMF comes in, it just becomes a question of, validating that plan and maybe tweaking it a little bit more. But what we foresee after that is you have a stable exchange rate, because I think what we need to avoid is volatility. When there's predictability, it becomes easier for importers, exporters to manage, to manage their businesses. So I think we foresee that will happen. Then we can also be on a proper recovery plan in terms of, production under GDP. So I think we can probably start seeing elevated levels, of GDP, improving from where we are currently. We've definitely had challenges. So it's more about a stable macroeconomic environment, an environment that is more predictable, an environment that supports growth. So I think that's what we foresee post that.
Andrew, do you agree with the expectations from the players in the financial market?
Yes, definitely. In fact, what we as a firm see is actually perhaps even a bit more optimistic than what some of the local commentators might see. And if you think about it, so you've asked a specific question about the IMF program, which is one part to it. There's other factors, such as what's happening with copper prices, which is the mainstay of this economy. What is the long-term outlook for that? And I think the outlook is very positive in that regard. So it's really about how do we capitalize on that. We've already seen comments. I was reading yesterday's paper from the Chamber of Mines saying, look, if we, for example, fix the tax regime, then we're looking at significantly ramping up the level of investment. So there is getting our house in order. There's also the opportunity that the global economy is bringing. You add to that issues of how we're performing the agri sector, if we can sustain that. Then how do we capitalize or use these obviously developments for the benefit of the country? There's obviously the elephant in the room around the debt restructure that needs to happen, and what will happen once we start making those payments, or once we get that in order. But I think there's a lot of cause for optimism, especially in terms of where we're positioned as a country. Yes, the risks are there, but the upsides that we can potentially benefit from, and we need to basically take advantage of, are there. And so we also have a very optimistic view. Yes, the challenges are there, but let's just say there's opportunity to get redemption. There's opportunity to get back on track as a country. There's obviously a lag effect, especially for the small and medium enterprises, the individuals, to feel that benefit. But if we have a lot more activity, a lot more transactions in the economy, if we have amounts which are owed to suppliers, to employees being paid, then that then also releases liquidity, which then generates economic activity, which then supports a stronger economic rebound. So yes, it's challenged, and it's expected to remain challenged for a while, but we should be at a point where we start to climb out of the pit rather than be digging the hole deeper, if I can put it that way.
Simangolwa has raised a very important point on copper prices. How much are they playing in trying to help the country recover?
No, I think it's a big factor. I mean, if you just look at the, because especially when you talk about the currency and how strong it is, it's always a function of demand and supply. And I think for a while we've had supply issues around the forex. So when copper price is this attractive, then it definitely is beneficial to this economy. And we've seen a few activities, the restructuring that is going on within the mining sector, which should help with better inflows into the country. The more inflows you have, the better the supply, then you're able to manage the demand, and your currency is even stable. I must hasten to mention that I think the benefits will even be more if production itself increases. And I think that's something that has to be resolved, so that the more the production increases, then the better the inflows. I think if you stretch it, probably you see, as a result of the positive copper prices, I think you also see better investor interest in the country. And I think there's a temptation to always look at them in silos, but that environment is critical, because for an investor, they'll look at what's happening in the economy and have, make their decisions based on that. So I think we've seen increased investor interest in the country in the recent past, which has also helped with the supply of forex. So apart from positive copper prices, investor interest on the back of that has also increased.
Betty, increased investor confidence, increased investor interest, high copper prices?
Listen, copper is king here, has been for a long time. So the copper numbers are looking great. I mean, the trend line's like this, and it's also very clear that copper is going to be crucial in the investment of digitization for around the world. And so this is a real opportunity for the country to say, okay, if we're going to earn more, let's see how we can spend it to diversify the economy, to build from the bottom.
If you're watching us, just know that we'll be getting questions from you as you throw them on the platform, from you viewers following us virtually. But before we get to those questions, Betty, I still want to get to you. with increased digital footprint in the financial sector, do you foresee banks and microfinance institutions closing additional brick and mortar?
Oh, you bet. In fact, I predicted it 3 years ago, and it appears it's happening. As my colleagues will tell me, there are less banks now than there were 5 years ago. And I think that what will happen is banks will digitize. If you look at the numbers from the FinScope 2020, which is a major survey done every 5 years, in 2015, 14% of the population used mobile money. In 2020, 59% of the population is using mobile money. And it drove financial inclusion for the last 5 years. The bank's numbers actually went down. And so I think that what we're going to see is we're going to see more and more people using mobile money in rural areas and urban areas. As soon as you can get power in a cell phone and cell service, people are starting to talk about, how do I get involved in mobile money? How do I save my money that way? How do I get money? How do I pay money? What about going to the local shop and using your mobile money? In Lusaka, if you stop and buy tomatoes on the street, you can pay with mobile money. That's a big change, isn't it? So we're going to see more of it. We're going to see it's going to diversify. We're going to see many more people going into supermarkets and using mobile money rather than using a credit or debit card. We're going to see small shops in rural areas. We're going to see the government's already working on experimentation now with paying school fees all over the country using mobile money.
That's a huge, huge impact.
You bet.
Smango.
4.5 million kids in school.
And collaborating.
Absolutely.
Are you still seeing a bigger threat, or you're still seeing a big partner coming on the platform?
Yeah, look, I mean, the threat will still be there, but I think there's more to gain from the partnerships. So I think that's critical for us, in supporting the businesses and individuals. I think what is, maybe just to make a comment on brick and mortar, we will not necessarily see the death of branches, but I think there'll be less and less going forward, definitely. But also, I think the other angle to probably take notice of is the opportunities that are there for people out there, because then, in supporting this partnership, you need agents, dotted across. And I think those are employment opportunities. Those are business opportunities for people to open, agents, for banks, for the mobile network operators, because there's always the last leg, especially if someone needs cash, there's that last leg. And this is a huge opportunity. And, I think the concept with all this is, can we make life easier for people that they can transact, using comfortable means. So you're going to buy sugar. If you need to withdraw money, can you do it? You buy your sugar, you also withdraw money from the same person, instead of going to buy sugar from a shop, going to a bank to go and withdraw money. So I think that's where the convenience is coming from. And that's not incremental, it's scalable. It's really, driving the volume. And we want to be part of it. Like I did indicate in my remarks, ultimately all the economic activities, somehow they still find themselves in the financial sector, because even that shop owner or filling station owner has to bank their money somewhere, and it will still come to the bank.
While you're still on mobile money, there's a question here for you. Does Bankers Association of Zambia have in plans of integrating cryptocurrencies in the near future, considering that's a growing industry?
Well, that's a heavy question. Look, I think we are all still appreciating, the evolution of cryptocurrency, and even from a regulatory perspective, I think Bank of Zambia are beginning to look at that space. So I think it's too early to think about, banking merging with the cryptocurrency initiatives. Am I saying it can never happen? Probably not. I mean, we've seen so many things that we never envisaged, coming to the fore. But I must say that, the cryptocurrency development is so different from the traditional, banking route that we've all been used to. So until we see how it evolves, I think it would be too early, to consider, that level of collaboration between banking and cryptocurrency. I think the risk profile is completely different. and I think it's something that we have to observe. And I think even from the regulatory environment would have to fundamentally change to be able to accommodate that as well. So I think it's a wait and see from a bankers association perspective.
Andrew, has that ever crossed your mind? Cryptocurrency and banking.
Well, you see what tends to happen, and in terms of how technology evolves, right, is that it's the behavior and the practice of individuals when you're looking at rapid innovation, right, and technologies that are coming forward. It's the behavior of individuals, it's their appreciation and their appetite to do certain things that actually drives certain innovations. So in this case, if we have a situation where cryptocurrency becomes widely used, or there are more and more people getting into that particular area, then you have a situation where the activity or the behavior has overtaken the regulation and the existing players. It's the same thing which happened with mobile money. When we had initial conversations around how is mobile money regulated, who is supposed to regulate it, it was after mobile money had already started taking off and the behavior started to become accepted, and it became a tool that could be used, that we then looked back and say, what's the appropriate regulation? Cryptocurrency is something that the whole world over is still figuring out in terms of what's the appropriate way to regulate it. There's a lot of benefits to it. There's a lot of risk as well because of how independently it's managed and administered. But there's definitely something there which, if there's behavior, if there's activity that starts to happen in that particular area, then it may develop a life of its own, but perhaps with the banks coming more cautiously in terms of what may happen. But it's still a way away. I can predict that we'll be discussing next year's survey
without cryptocurrency.
in the Zambian banking sector.
Before I ask you to comment on the cryptocurrency, I want us to pick this other question. There's a growth in non-regulated lending institutions. Village banking has been cited as an example. These are providing unfair competition to non-banks who are heavily regulated. Should these be regulated too?
So my answer is no. And the reason why is because our research in the last few years has demonstrated that people enter into the formal financial services industry by starting with what is called savings groups. And they're self-formed, they're self-managed, they're temporary in nature, they usually last about a year. People save, they interlend, and they also have a small amount of money they set aside for emergencies, which is a self-insurance scheme. They're growing fast because they're successful. There have been problems, but they're self-policed pretty effectively. About 80% of the members are female. And we saw in FinScope that there was a dip in the total percentages, but there was an increase in the total people who are participating. So, and why don't you regulate them? You don't regulate them because this is the beginning. It's a temporary arrangement. So they last a year, then they do another year, then they do another year. Then they say, somebody in the group will say, I'm getting too big. I can't borrow from the group. I need to then start talking to a non-bank or a bank about borrowing, about saving. So that's how we see it emerging. And if we give the burden of administering thousands of little tiny savings groups to the central bank, it'll be overwhelmed. So it, like many other central banks say, as long as it's temporary and self-managed, and it's also an arrangement where people know what to do, and they're trained and they're supported, then they can be self-managed.
Mangola, village banking.
Yes.
Should it be regulated?
No, I completely agree with Betty. In fact, Betty has done, with her team, have done research in this area that has even helped us, view this even from a banking perspective. There are some groups that have grown so big that they do their savings through bank accounts.
Yeah.
And we're seeing those flows coming to the sector. So I completely agree with Betty. They shouldn't be regulated. I think one of the things that we've been struggling with is financial education, and I think it starts from there. Let them practice it in different areas. Then they get the 101, the basics, of savings. Then even as we approach them from a bank or non-bank perspective, we are dealing with people who have had hands-on practice, around that, and most of them use those savings to be able to support their small businesses, and their families. And eventually, those flows find themselves to a bank or non-bank institution. So I think we need to really support that.
They're not a threat.
They are not a threat. Yeah.
Not as yet.
That would be a bedrock for the financial sector going forward, because the more organized they become, then, the flows will keep coming. So they are not an immediate threat. I think consider it a necessary.
And do we see village banking in next year's report?
It's possible. Obviously, because in a few years' time, I could see it as potentially a source of an area where banks potentially are innovating. So you almost have, because why do you have a village bank, right? Or why do you have an informal financial arrangement? It's because of either the risk profile, the convenience, which is perhaps the banks are a bit more inconvenient in how they operate, the speed with which they transact, and the general flexibility. One village bank has got a different set of rules to another village bank. Maybe they even have the same members, right? So whatever constitution they come up with is what they agree, is what works for them. Where does that money go? All right, that money doesn't sit. I don't know of many village banks that have. Perhaps they're there. They keep that money in their houses. That money is probably sitting in one or two bank accounts. It's moving from one account to the other. And there are some financial institutions that have actually started innovating around this, giving village banks the opportunity to use their platforms to make it even more convenient. That is a fact. So you see it as, I think, as Simangola said, it's an addition, it's an extension of the financial sector in terms of the services and that is providing. It's also providing a way in which people get a better understanding of how borrowings work, how savings work, because you have to abide by a simple constitution that is enforced quite rigorously in most cases by the members. So there's a lot of benefit in terms of the impact. Those are we are bringing people perhaps who are not in the banking sector in the first place. And like I said, like Simangola said, if you look at regulating those, I mean, where do you even start? Something else will come up. It's a lot better than a lot of the other informal lending that takes place. Perhaps if you think about loan sharks and things like that, in this environment, it's a lot safer. It's a lot more structured, and it continues to grow if managed properly, and there's plenty of opportunity there, and opportunity for commercial banks and non-bank financial institutions as well.
Simangola, this looks like your question. With Zambia facing the COVID-19 third wave, are we expecting an increase in NPLs and possible increase in restructured loans? Is Bankers Association of Zambia in talks with the regulator around this possibility?
Well, good question. Are we expecting an increase? There could be, but I think nothing outside the levels that we have seen so far. I think if you see the level of non-performing loans increased marginally, but I think, like I did indicate earlier, it's been about the response to this particular threat that has helped with this particular issue. You can almost isolate the impact of COVID to certain sectors. I mean, take aviation, take tourism. The hotels and the hospitality industry. They've significantly been impacted, while others, have continued with the business as usual kind of operations and have been adjusting along the way. So it's almost, there've been compensatory developments that have helped cushion the highly impacted areas. So I think it will evolve. I see, I think the second part of the question is, are we seeing restructures and so on? These are already happening. And most banks, for their own survival, they needed to implement, these measures, because then you look at your client and just say, what are they facing? How can we support them? Because that's where you get your revenues from. That's how you sustain your business. So I think there are likely to be more and more restructures. The level may increase, but nothing outside the current appetite. But should the situation worsen, then that's when we see the curve moving the wrong way. But like Betty indicated, some of the optimism is coming from the availability of vaccinations. And I think we'll do well, to get vaccinated, because then you reduce the impact of that. It's better for the families, it's better for the individuals, it's better for this economy. I think when you lose people that are close to you, that's when it really hits you. So I foresee a situation where as more and more citizens get vaccinated, the impact will subside.
Andrew, before we go to the next question, maybe you can quickly add on what Simangolo has spoken about.
Definitely. Yeah, sure. And I think the point is we've been through peaks and troughs regarding COVID-19, first wave, second wave, third wave. We must have learned something, right? And what have we learned? So I'm sure the banks have learned something about how to better manage their customers in terms of managing and the support that they need through this period. The customers, borrowers, depositors have also learned something about how to respond. So as we go through these ups and downs with the pandemic, what we expect to then see is a more dynamic or a faster response, a reaction to the challenges, so that we're not reacting at the same pace that we did with, say, during the first wave, when we were perhaps a bit more uncertain of where we were going. We're now seeing, okay, this is what has happened. We've got this situation. Very quickly, we're scaling down operations. Very quickly, we're talking to our customers to say, this is how we are changing our operations. We are perceiving that you might need a restructure. You've got this repayment due next month. We need to talk now. So the word, I think, is I expect that financial institutions will be a lot more proactive, just like customers will be a lot more proactive, given we've learned a thing or two since the pandemic started. Not to say that it won't be without its challenges, but really it's about applying the lessons learned so far. Yeah.
Betty, maybe you could start. During the past year, we have seen financial players take on significant impairment on government-related instruments. Do you expect this trend to continue going forward?
Not sure. I'm not a financial player.
No predictions.
No, but it is conceivable. I mean, the government-related instruments, a big part of this is elections finished. Teams are stepping up and saying, okay, now let's get down to how are we going to deal with the IMF? How are we going to implement fully our planned restructuring arrangements? The faster the government moves and the faster the engagement with the fund and with other players, I think that's going to restore a lot of confidence. You're going to see a lot less problems with repairment.
Yeah, it sounds like a technical question in the sense that I think whoever is asking is probably a banker. and they are referring
trying to get you to talk about
international accounting standards and things like that. It sounds like these are the accountants, but they call it IFRS 9, where you are looking at changing the way you view credit risk, where you take a forward-looking view. And I think what they're asking is, related to that. And I think it's a matter of models and principles that are adopted globally, where you say previously these were considered zero-risk instruments. If you invest in treasury bills, government bonds, that's why they call it free risk investments, right? But I think there have been changes from 2018 from an accounting perspective in terms of how you view credit risk, including things like government paper, government securities, where you would have to take a view that you can take a loss on it. So without really going into the details, it sounds like a technical question.
Technical question. Andrew, you want to take on the technical question?
Yeah, no problem. So the question is, do we see them in the same quantum? So we need to put this into perspective. Before last year, we probably had very minimal, if at all any, impairments on government's securities specifically. Okay, so there's very little loan loss provisions carried, and I'll try and just keep it simple. Last year, you have a situation where the government the government of the Republic of Zambia is rated a certain way by the credit rating agencies. You have a default that has a knock-on effect on the instruments that it's issued. Now, in proportion to the total value of instruments in issue, the impairments are probably not that big. Okay, if you take what's the total government instruments in issue versus how much has been determined as an impairment, potential impairment charge, it's probably not that big. The reason why there was a shock to the system is that it's coming from a very low base. Okay, So what's likely to drive this going forward? We already saw some credit rating agencies start to change their perception to make them more positive in terms of the outlook. So you may actually see some reversals of provisions made previously, but then you still have the fact that the total stock of government securities that is in issue is growing. So there will be a number that will be taken on the increment and probably a reduction on what was made previously. So relatively, it's unlikely you see the same shock simply because you are not starting from zero, but depending on how the country's risk is perceived, you could actually see an improvement in relative terms going forward. So yes, it's a technical issue. It was a fairly controversial issue. I think the industry worked through it quite well. And if the sentiment continues to improve, especially from credit rating agencies and the performance of the government with respect to its obligations, you should see some improvements, at least in relative terms.
We've got 3 minutes before we give it back to Lyndon to wind up, but I'll give you each a minute to summarize and to take up this question as you go. How can we improve the digital skills of our people and guard against frauds that emanate from lack of digital skills? Andrew, I want you to start, but I also want you to add this other question. What do you see as the biggest opportunities and impediments for the financial markets in Zambia? As you close, 1 minute.
Digital skills, there's a lot that's available. Digital skills you enhance through practice and engaging with the tools and the tools that are available, the systems, etc. A lot of those, the cost is negligible. I mean, if I was to put it mildly, you can log on to a YouTube channel or things like that. You can learn a lot of the things that are already there. Very, very simple. It's just about, you've got access to data, access to smartphones. It's a lot easier to learn certain things and access certain tools. It's about basically engaging with them. I think that's very important. I'll just make one point there. In terms of opportunities, I think I've already mentioned the recovery of the economy, especially on the back of, we see especially the copper cycle at the moment, the agric cycle, as the ability of pulling Zambia out of the doldrums. It's about how do we ride that wave, how do we support, how do the financial sector support those who are involved in that value chain process, and then pick up the opportunities from there. So there are opportunities, I think, stemming from there where we are going as a country, and what we've talked about in terms of the areas where the digital story as well is also one that's quite powerful in terms of how those tools can be used to provide new opportunities, provide new services, and enable greater transactions.
Smangolo, under a minute.
Yeah, sure. Just to agree with Andrew around the digital space, it's hands-on. And I think for those of us who are trying to bring in financial services solutions, I think our posture has always been, let's not create something separate. Let's use tools that people are already comfortable with. So for instance, can you do your banking while you're on your Facebook, while you're on WhatsApp, and things like that? So that you're using channels that you're already comfortable with, and then we just come and plug a financial solution to that. So I think in terms of skills, we are utilizing the available skills in promoting financial transactions. And in terms of opportunities, I think for us as we go forward, the country has proven some level of resilience to the major shocks that have come our way. And I think we'll do well as a sector and other players to continue encouraging investment into productive sectors so that we can support the growth of the economy.
Betty, under a minute.
Sure. I think information communication is going to be crucial. For digital, 40% of the population doesn't have a cell phone. So how are they going to do this stuff? So one of the things that we've proposed to the Bank of Zambia, and we're in discussions with them now, is expanding the work that we've been doing in local language soap operas on community radio, on DFS. And so we're hoping to expand this to other areas in the country and move this forward. And that's a partnership with the Bank of Zambia. In terms of where the country is going, the population really needs to understand, because when people in Zambia understand, they do support very actively.
Thank you so much. Thank you, panel. It's been a wonderful discussion. I hope we can have another one, a longer one. I'll ask Lyndon to close. We're running out of time.